How often have you been watching price breaking out and discussed with yourself, should I join this move or should I fade it? Just to then, after entering a long position, watching it pulling back, or after entering a short position, watching it blowing further up, trapping you and stopping you out. I'm a Stacey Burke Style trader that enhanced the Stacey Burke system with his own elements, and I will tell you in this video exactly how you should trade these situations and what to look for. So looking at breakout versus reversal trades, there is obviously a lot of variations to look at on the day. So we typically, of course, wait for a previous day high to be broken. And then there is a lot of variations going on from there. So what I'm looking at to distinguish a breakout versus a reversal trade. So the considerations are the following. First, we zoom out and look at the higher time frame bias. What's the bias of the month and the week? Are month and week in breakout or fake out low, so bullish, or are they bearish, coming out of a fake out high or in breakdown? This makes a big difference because we really need to see if we are in a parabolic move or if we are in a downtrend. Then we look at the signals if it's overextended. So do we have 3 weeks of longs or shorts, 3 days of longs or shorts, especially on the long side, of course. So are we overextended and potentially are reversing here because of weak hands in the market? Then, of course, we look at the levels. So how are we trading in relation to the previous ranges? Previous days range, previous week range. So are we at the low of the week, low of previous week and current, or are we already at the high of the week, hitting previous week's high, or are we right below it? And same with the month. So looking at the monthly levels, what's the monthly template? Are we rotating up or down? So that's very important to see before the session, and then you already have a broad idea often in which direction it might have more power. Then, of course, timing. What's the day of the week? Are we in the beginning of the week or are we end week? That makes a big difference because beginning of the week, front side, as we know, often expands the range. End of the week often reverses backside of the week. And then, of course, most importantly, the setup on the day, behavior of price on the day. So what's the lower time frame trap? Where is trap traders? Are we in a deathline setup and already trapped 2 sessions above previous day high and now pulling back down? Or are we trapping maybe even shorts already, trading a lot of volume already above previous day high, putting in a peak formation low, trapping shorts that fade the move and blow further up? And also then on the very low time frame, do we have a 15-minute fake out high low or a 5-minute? So do we get a good entry based on a lower time frame fake out? So let's look at this one level deeper. So here I brought everything on the page that I am considering for a breakout versus a reversal. Of course, there is some more situations. So if you are in a breakout, you might also get 3 sessions of rise out of the breakout for a short. But this is a different situation for me. For me, this is the critical decision. If we are trading still around previous day high, then it's pretty tricky to find out if you should wait for a long or a short. If we are already trading 3 sessions of rise up, of course, there's also the discussion, will it pull back or will it continue further on? But that's a different discussion. I would now discuss the situation trading around previous day high. So let's look at it. So here we have a daily breakout coming up, maybe even an 8-hour breakout. So we really have to see where is the 8-hour range? Because as you know, I always look at the 8-hour, and with the 8-hour, you also can see what the previous sessions did. And if you are trapping volume above the range of the day, so then you look at the equity open hours. So it might break up with equity open. This is always a good sign because there's volume behind this move. And then you are checking especially what it does coming into third hour, 10 o'clock. And then here you see we are often at crossroads. Of course, as said, many variations, but the crossroads here are we putting in an M15 fake out low above previous day high, blowing on with enough higher time frame confluence for a long, and going for a one full expansion of the 8-hour range? That would be the classic long situation here. The key question to ask for this for you, is it parabolic? So do we really have the fuel for a parabolic range expansion move to the upside? Or are we already overextended and just creeping around in breakout? Then you don't want to go long, of course. Or the other way, do we lose previous day high, trading back down, maybe closing a 15-minute bar below previous day high and previous 8 high, confirming a potential short setup, but then you still are careful and watching what's happening. So you really want to have bearish pressure. So higher time frames bearish or overextended, and then waiting for a lower time frame fake out, maybe a M15 or 5-minute fake out high below previous day high in third hour with higher time frame bearish pressure. Then you go for a short. But the key question here to be asked is always, are longs trapped? You really need to be sure that longs are trapped above previous day high, so with a desk line setup, and also the lower time frame. Do you have already short strapped on the lower time frame to give you a good entry? I will also show you examples of this going forward. So confluences for a breakout long. To zoom this up, we want to have higher time frames bullish. Otherwise you don't get a parabolic move here and don't have enough fuel. We don't want to be overextended. We want to have enough space in previous week range. So we don't want to trade into previous week high. So we want to already be in breakout or in fake out low on the week with enough space to previous week high. So there really has to be enough space for the move. We want to be preferably early in the week for range expansion moves, not end week. It's not necessarily a criteria, but at least you look at it. We want to be above previous week high in a breakout, preferably, or above previous week low, as just discussed. Then we want the 8H be in breakout, so trading above the 8-hour range or in fake out low. So maybe you have already an 8-hour candle above previous day high and you get an 8-hour fake out low for a continuation. That's even better. And then you want to have an M15 fake out low to confirm your entry. So this would be the long situation. Key question, to repeat that, is it really parabolic and going into a range expansion? That's something you need to feel for the chart. Then for the short, reversal short, you want it to be heavy. So it needs to be higher time frame bearish. So monthly fake out high, for example, weekly breakdown. So in a low hanging fruit situation, maybe overextended, could be on the lower time frame. So 3 days of longs, overextended short, or also 3 weeks of longs, overextended short. So really you need to see pressure downwards or an overextended situation. Then you want previous week high freshly hit and faked out together, maybe with a previous day high, or you want to have previous week low lost. So again, how are we trading in relation to previous week range? Very important. Are we at the high of the range with enough space to the low? Are we in breakout and have enough space to previous week high, or are we already below previous week low and are in a low-hanging fruit situation. Very important. You need space for the trade. Then preferably late in the week. I mean, it can also blow off, of course, beginning of the week to the downside, but this is rather a trade for later in the week to get the backside, as Stacey also discusses a lot. Then you want the 8 hour to be in fake out high bearishly or in breakdown. So sometimes you get a low hanging fruit also, as we've seen a lot of times. Also yesterday, for example, in NASDAQ. So if it breaks down the 8 hour, then you might have a low-hanging fruit entry below the 8 hour level also. So this can be also a nice continuation trade. So you don't always look for the reversal at the beginning of the move, but sometimes it's even better to wait for a stronger pullback and consider a low-hanging fruit continuation trade for these reversals, reversal continuation as I call it. And then optimal situation would be to get a lower time frame fake out, M15 or M5 fake out high for a good entry. Sometimes you don't get it, sometimes it just blows on and you take the continuation aggressively. Key questions, as discussed, are longs really trapped? So you really need to be longs in trouble, underwater, being liquidated, and then you have enough fuel for the short. So this is the overall situation, how I judge it. And now let's look at some examples on the chart. So now let's look at some examples. I prepared 3 examples for you. One short trade, one long trade, and one short trade that looked like a short one, but then was actually a long. So a real borderline case where you needed all your senses to get the thing right. So here, gold, 23rd of October. Situation here, as you see, it broke out in London, put in a peak formation high. Here you see a head and shoulder pattern, and then losing the level, trading back down into previous day's range and approaching third hour rotation. So there you see the 8 hour range was already lost. So we also always said we want to have the 8 hour range behind us and bearish. We see we have a huge peak formation above previous day high. So this is a lot of volume trapped. We have the higher time frames bullish, but overextended. So the month is in 3 months of longs, and the day is also in 3 days of longs. So that's an overextended situation, and it's already a pretty strong move down. And as you see then here, we are trading above previous 8 low, so very low, and we even get a 5-minute fake out high coming into third hour. So this is for me enough confirmation to take a short, and I took this short also exactly with third hour rotation, and you see here how it played out. It blows off with the third hour rotation completely to the bottom, and it does a multiple 8 hour range expansion, so it's 2 range expansions to the low. So this is a very clear situation where you could have joined the reversal relatively late here. I mean, some people might have tried to join this with the open, also possible. I don't like that, as you know. I like to enter this into third hour, and as you see, then you have a nice fake out high. It's even a 15-minute fake out high with the open, trapping some of the longs again that think that this might reverse from here. So longs trapped short term, longs trapped on the day, and then you just join in with the long, with the short. Then second example, breakout, but already trading far up, but 1, 2, 3 pushes to the high. 3 sessions of rise, so a lot of signals that also could lead to a short, but we are looking higher time frames, all bullish. We are coming out of an inside day even, blowing to the top. That's pretty parabolic. We have a first green day also. And then we don't have an 8-hour fake out high. So the 8-hour is in breakout. The day is in breakout. We are trading above previous day high. So what are we looking for? We are looking for a 15-minute fake out low. So this is clearly a parabolic move on all time frames. Still, you have to be careful, of course. You can't just join the move up here, because then you probably will get a pullback that kills you. So you are sure now that it's a parabolic move, but you need to have some shorts at least trapped to join the move. And then if we look what's happening here, it's trading further down. You get a 15-minute fake out low down here. And then with this confirmation here, you can enter a nice long from here and then just trade up to the high of the day. Or you can even trade it further up and then exit with a 15-minute fake out high, which is an exit signal, a nice one. In this case, the 8-hour range was pretty large already, and you had a pullback, so I wouldn't look for a range expansion. But this was already a nice trade here with an R3 parabolic move. You're sure it's a parabolic move, so you wait for a pullback, 15-minute fake out low, and then you just join the breakout and see how far it goes. That was the second example. Now look at a third example. This is a borderline case. That's why I brought it in. So we have month and week in breakout, overextended. The day broke out here, but just in a shallow little wick. So we have a fake out high, but then it pulled back in again with a deep candle with equity open. It is a Tuesday even, so it's early week, 22nd of October, also gold. So many people will short that. But, I mean, it's even a 3 days of longs and the first red day. But it's, for me, I took this long trade. For me, I mean, this candle with equity open was very strong. Yes, you had a daily fake out high and you had an 8-hour fake out high, but there was not a lot of volume trapped at the high, and the higher time frames are still bullish and parabolic. And you had already here the short the day before that worked out, so that you get the second short the next day again is very improbable. And it was already very deep here coming into third hour. So you wait what's happening. And have a bit of patience. It's coming back down, and then you see it does a 15-minute fake out low, and this is definitely not a signal for a short entry. It's pretty risky to take a long entry, of course, below previous day high. I did it actually and traded it up from here. Typically you don't take this trade, but you can see in some cases you can even take the long trade here and trade it up from down there. I mean, it was not a parabolic move up, but it was a clear situation that you don't take a short for me, because this was just not price action, behavior of price for a short, higher time frames bullish. This huge death candle, yes, trapping longs, but not enough volume up here. You're already far down low, so you would need another fake out high for a continuation. What you get is a fake out low, and then I just took the bet to trade it up to the high of the day. And this was a nice long position. A lot of shorts were trapped here, so you always have to think, is it an obvious long or short? And if it's too obvious, it might just trap in the other direction. And this is what happened here. Equity open, trapped the shorts, then it did a 15-minute fake out low, and then it blew further up. So sometimes it's not clear, then you rather stay out, but in many cases it's pretty clear. And if you apply the rules I showed you on the higher time frame as context on the day, watching volume to be trapped, and then on a lower time frame look for a nice entry. And then at the end also look at it with your trading judgment. Is it too obvious? Might it just trap you at the moment? And then you are pretty safe to trade in the right direction. So I hope that was helpful. If you like this type of thinking around trading, join the Discord community if you like, or subscribe to the channel, like the video, or let me some comments if you have questions. So I hope this was helpful. Thank you for watching. Have a nice day.